Good evening, good morning, good night, wherever watching this transmission. Tis I, Mike Martins. Man, I got a really doozy of a housing article here from Bloomberg. It's actually kind of important. Don't mind me, I got the kids in the hallway there making a bunch of noise, and I wanted to actually read this with you guys before we go out. I'm going out today, so I'll be making some videos on the road today for you guys and showing some areas around my house. So we're on our way to Kelowna. We're debating to go to Peachland instead, and Castlegar, other places around my area. Really nice. Anyways, Trump's housing agency cracks down on zero-down home loans. So remember, guys, remember the dangers of this? Remember how the UK was offering zero-down home loans if you qualify, sign right here? Well, this is a very shady and very greedy way of growing the markets. But if people put zero down, they got very little room to work off to hedge against a downturn, right? So U.S. worries about risk of $1.3 trillion in federal mortgages, and measure may target national program run through Indian band. Oh, okay. So that's something else there. The Trump administration is cracking down on our national affordable housing programs because of concern over growing risk to the government's almost $1.3 trillion portfolio of federally insured mortgages. So this is a big deal, okay? Federally insured mortgages like CMHC in Canada, right? The effort targets providers of money for borrowers who can't afford the 3.5% down payment typically required by the Federal Housing Administration loans, such as help from the government agencies and families enables 4 in 10 FHA loan borrowers in a government down payment assistance program become delinquent at about twice the rate of those who put up their own money. So people that don't, I guess, put their money down have a better chance at becoming delinquent, right? It's almost like going on a free-for-all with a credit card and saying, well, I'm going bankrupt anyway. They just mailed me this credit card. That's their problem. I'm going to go out and spend. I know I can't pay it back, but I got the credit card here. So you get what I'm saying with that, right? A new U.S. Housing and Urban Development Guideline published on its website last week would be particularly harmful to the CHONA Fund, one of the largest down payment programs in the U.S. A Utah mortgage entrepreneur named Richard Ferguson runs a CHONA Fund on behalf of the Cedar Band in the Payinits, the tribal government in Utah. It is providing $100 million a month in loans to borrowers who can't meet the FHA down payment requirements, while many cities, counties, and state housing finance agencies also provide similar help. They typically limit the loans to local residents. CHONA operates nationally. HUD said government agencies must document that they are helping borrowers buy property only within their jurisdictions. But property only within their jurisdiction, tribal governments, it is said that many only offer assistance to members living on tribal land or elsewhere. So that's reserves, right? This is obviously very concerning, Ferguson said in a phone interview. It appears that HUD is trying to put up the tribe back on the reservation. Cedars Band Mortgage Company said in a statement that HUD action is discriminatory against Native Americans that would hurt minority borrowers who represent more than half of CHONA's customers. It plans to challenge HUD in court, according to the statement. Fee concerns. So what's happening is people are getting these loans, and this one is targeting more of some of the First Nations living in the Utah, Montana area up there. And affordability in some areas, a lot of people here in Canada, okay, and here in Vancouver, I walk down the street and I look at, oh, see that bungalow? That's $2.4 million. Look at that bungalow. That's $4 million. And I'm being very conservative, okay? Those same houses in those areas in Utah, that is like maybe 80, 90 grand. But those houses are not 80, 90 grand anymore in Utah in those areas. They're like 140. So affordability levels are way out of reach, right? After the 2008 housing crash, Congress prohibited down payment assistance from any party with financial interest in the transaction, such as operations ended up costing the FHA's insurance $17 billion when borrowers got in trouble. But the FAH ban didn't apply to federal, state, and local government programs, which now make up a majority of 2,500 U.S. down payment assistance outfits. So In Canada, we have first-time homebuyer loans, and we get all these different stuff to help. And I could see it kind of being working in the United States more than in Canada, where you're stuck. If you want to live in one of the major cities, or three major cities in the country, you need to really have a mid six-figure income to afford a bungalow or a detached 3-bedroom, 2-bath home. So we are in more dire straits than we are in Canada and Australia and the UK than the United States is. And I know it's not all roses and gardens down in the US, and it's not all you know what I mean, right, guys? So, but they got their problems. But guys, watch out. Zero down home loans, watch out. The UK did that, and there's a mass disaster of foreclosures and people losing everything they pretty much work for. Ooh, belly fat. Look at that stomach. So you guys know I'm teleprompter free, and I love how this thing just brings up a 50 million. All right, I'm just going to leave this there. So somebody commented, didn't Mike Martins profit from real estate? That was a good one. I had that on Morning Coffee with Mike. Guys, you know what? I didn't buy my house to make money. Hand to God. If I did, I would have bought in this city in 2006 and 2007, and I could have been sitting on a house that I couldn't sell today, and I would be probably up $400,000. And I'd be in a lot of trouble today if that was the case. But unfortunately, I didn't. I bought my house to live in. I bought my house to raise my family and have my children. If you guys go back to my older videos, you'll see. Guys, I'm going to leave at the end of the video here. Mike in the Night, really hot topics, good call-ins on Mike in the Night. And I'll leave last Wednesday's Trends in the Housing Market at the end of this video. Don't forget to watch Trends in the Housing Market, all English-speaking countries included, and what's happening and how this is affecting us all. And guys, let me know what you guys think about this interest-only stuff. No interest, interest-only mortgages too, and zero down on mortgages. Zero down, sign right here, you qualify. That is dangerous and scary when people aren't using their own money. Why? Because nobody has 2 nickels to rub together anymore like they used to. Nowadays, it's borrow, 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 and capitalism doesn't work. I mean, capitalism is good if wages can keep up with inflation. If they haven't, wages are not keeping up with inflation, and look what it's gotten us into right now. Everything goes up in price, house values, assets, everything goes up, but our wages don't coincide with it, and that's what's crippling us. And that's why unaffordability levels on a $200,000-$300,000 home is unaffordable, because people they're still making what they made in 1997. Anyways, guys, family's packing the van. Let me know what you guys think in the comments below. I'll make some nice videos for you guys today. I'm going to go check out some big cities, other cities here in British Columbia. And let me know what you guys think in the comments below. Thanks for watching.